Hello and welcome to BQ Prime. You're watching Ask BQ, a show where we get all your stock-related queries answered by fundamental and technical analysts. Remember, you can send in your queries on either of our social media handles or on the WhatsApp number that's flashing on your screen right now. You can also send in your questions to the YouTube live chat. Now, let me introduce you to our guests for today. We have with us Ms. Sharmila Joshi of sharmilajoshi.com and Mr. Kush Bohra of kushbohra.com. Welcome. It's a pleasure having you on the show again. Now, before we get into questions, let's first take a look at the BQ focus for today. We're going to be talking about auto sector and particularly Tata Motors that came out with its second quarter earnings yesterday. Let's take a look at the numbers first. So, the company reported a profit for the fourth consecutive quarter from June to September, but missed consensus estimates. Its net profit stood at 3,764 crore against a net loss of 944 crore in the same quarter of last year. Meanwhile, revenue rose to 32% to 1,05,128 crore. EBITDA increased 147% to 13,767 crore. Margin expanded to 13.1% versus 6.99% last year. Now, Q2 results of other auto companies look promising this time. With the festive season coming up, that may see an increase in demand. The sentiment looks positive for the sector. But let's go to our guests and see how they're viewing the sector. Sharmila, let's go to you first. How are you looking at the auto sector, especially longer term view, and especially Tata Motors? What's your view on the stock?
We did see monthly sales numbers as well, and they sort of seem to confirm the view that I've had for the past couple of months, that it's passenger vehicles and two-wheelers where we are seeing the growth. Yes, I think the festive season getting elongated could have had some impact, but given the fact that most of these car companies have introduced new models, you are seeing good uptick there. So having said that, I'm positive on a TVS Motor in the two-wheeler space and a Tata Motors in the four-wheeler space. While I do think that perhaps Maruti numbers were sort of above estimates and great numbers from Maruti, I think from a price perspective point, and if I had to buy a stock from a two-year perspective, I would probably prefer Tata Motors at this point in time because they have added capacity both in India as well as for GLR going forward. And they are talking of electric vehicles, not which they've obviously rolled out in the Indian space, and that's been doing well for them. But they've also spoken extensively about the kind of EV plans they have for GLR. So given all that, I think the stock is at a great level, and if you buy it, you should buy it with that 2-year view.
All right, fair. Kush, let's go to you. Now, I'm looking at the stock and it's up about 2.6% today. What are the cues on the chart for Tata Motors? And if there's any other auto stock that you're looking at?
Hi, sure. So first up, thank you for having me on the show. Well, look, I think somewhere the stock was actually kind of anticipating, or the markets were anticipating, the kind of numbers came out, and not too disappointed even on the miss that has been posted. Because if you see, 625 was a level that was held for the better part of the last week, and the stock was due a rebound. So we're getting that today. And on the whole, the stock is in a bit of a consolidation mode right now, but the bias now turns positive. So I think on the upside, from a near-term perspective, I think 680 and 710 are the two levels that we're looking at. And on the downside, the support zone is very clear. It's about 625, where one should place a stop loss if someone's taking a fresh entry, or even if you've got an existing position from lower levels. Some of the names Sharmila's already mentioned that even we track, which is TVS Motor and Maruti, although we are slightly more optimistic on Maruti even from here. One name that I would like to add to the list is Bajaj Auto. The stock been doing well. No reason to say that the near-term uptrend could perhaps fizzle out or decline. So Bajaj Auto is one stock that I would like to add, in the list of the auto stocks.
All right, let's start off with the questions now. The first question is from Bhupendra. He bought 500 shares of Chalet Hotels during the lockdown at 141 per share. He wants to know if this is a good time to sell. Sharmila, what's your outlook on Chalet Hotels?
I'm sorry, what price has he bought it at?
Sorry?
I think he can continue to hold the stock. I would have a sort of a target of around 610 on the stock. Valuations are sort of it's sort of priced in. Everything at the moment is priced in. But given the fact that they've been reporting good numbers, I think it makes sense to hold the stock, especially in a quarter where you're really looking at a festival season and then a holiday season and then a marriage season. So I think it makes sense to continue to hold the stock. And as I said, my target would be close to 610.
Okay. Kush, how are you viewing Chalet Hotels? The stock is currently trading around 577 and Bhupender bought it at 141 during the lockdown.
Well, first up, I must congratulate him on buying that stock and more so for holding on to this stock for such a long time. The latter is perhaps the more difficult thing to do, isn't it? So kudos on that. See, again, in the medium term, there isn't anything that is suggesting that the stock could perhaps decline. The entire hotel space had actually seen quite a bit of run up, even including the likes of Indian hotels and a couple of other names. But we've seen a bit of a dip in the last couple of weeks, but that's all right because that came in line with the market correction, and also the fact that these stocks had run up and the profit booking was due. Now if you see, 540 is the level where it took a support at and it's rebounding. Even if I look at it from a medium to rather a short to medium term perspective, I think on the upside, don't be surprised to see 600 or 640 kind of levels. I think he should hold on to this stock. The only thing is book profits partially, but if he doesn't really need the money, then it's all right. Just hold it with a trailing stop loss. As the stock keeps going up, keep moving your stop loss higher. But 640 is the kind of levels that the stock could move to in the next couple of quarters.
Okay, there you have it. Next up, we have an interesting stock, which is RateGain, which is up about 6% today. The question is from Nilesh Patil, and he wants to know if he should continue holding for the next 1 year. Sharmila, how are you viewing RateGain?
RateGain. I'm sorry, I missed the stock name. Yes, so I think this is a stock I do like, and once again, I think it would be a hold from my end because numbers here are looking good and improving. Yes, I think just continue to hold. Perhaps your first target that you could look at could be at in the 750 range, but do revisit the stock when it's at 750 and check whether you can continue to hold it.
Okay. Kush, I think RateGain Travel Technologies, if I'm not wrong, it also hit a 52-week high a couple of days ago. How are you viewing the stock going forward? Should you continue holding it?
Oh, absolutely. Even if you look at it from multiple time frames perspective, the stocks in an uptrend. It had seen a bit of a correction, I could say, from 640 levels all the way down to 540 levels. But that was a healthy sign, and the stocks rebounded quite sharply from there. Volumes have also picked up in the last couple of days. So I think there is all the reason for the investor to hold on to this one. On the upside, if you look at the up move, this momentum could very well take it to 760 and then perhaps 790 kind of levels also. So nothing suggesting any kind of slowing down. But then again, as I said, if money is not an issue, continue to hold. Otherwise, book profits partially.
Okay. All right. Next up, we have a question from our regular viewer, Mr. Rajesh Maheshwari from Indore. And he's talking about two counters, Siemens and Bosch. So he wants to know the short to medium term outlook for these stocks. He's holding Siemens at an average price of 3,030 and Bosch at an average price of 14,500. He wants to know if he should remain invested or exit. Since it's a short term outlook, let's go to you, Kush.
Well, look, Siemens, as we know, has had a bit of trouble, mainly from its global, company, holding company. That's where the trouble lies. Now, from a short-term perspective, the saving grace is that the stock is now close to its support zone of 3,300, 3,350, and on the daily charts, it's also gone into a bit of an oversold territory, and hence a rebound cannot be ruled out. Since the buying price is close to the current price, it's not a bad idea to hold on. What I would suggest is have a strict, trailing, rather a stop loss at 3275. If the stock breaches this, it could see further fall. But then if this level is held on the upside, the stock could make a dash towards 3450 and then 3520 zones, where also the 200-day moving average lie. So hold on to this one with a trailing stop loss. It could very well see trading a technical bounce from here. As far as Bosch goes, here it's a little mixed because the stock is actually now come back within the consolidation range of 19,600 to about 18,800. So it's within that band right now. The bias is mildly turned positive for the last couple of days. So the good thing is that this is still head and shoulders above its above the investors rather buying price. So I would suggest a trailing stop loss here. Again, close to the lower end of the band, which is 18,800. If the stock breaches that, exit. Otherwise, hold on to this stock. It could perhaps break out and give an upside momentum. But 18,800 is where I would place my stop loss, and even if that gets triggered, he'd be in a neat profit. So yeah, I mean that's where I would hold it.
Okay, let's take a fundamental check on these two stocks as well, because Kush mentioned about the macroeconomic headwinds, especially in Siemens. So, Sharmila, how are you viewing Siemens and even Bosch for that matter?
Well, according to me, both really you should not worry too much in the sense that if, these should typically be the stocks that you should have in your long-term portfolio.
Okay.
So I don't think that you should worry about what's happening in the short term. And Bosch, I think in any case, is way above his buying price. And Siemens also, I think sometimes things happen and then they sort of over a period of time these things sort of rationalize. So whether it's Siemens or whether it is Bosch, I'm positive on both very well run companies. I think just continue to hold both.
Okay, next up we have a very interesting question from Mehek, and she says that FIIs are bullish on India, then why do they keep selling? Words and their actions are opposite. Sharmila, how are you viewing the situation?
So yes, I think the long-term view on India is positive, given the fact that what our GDP growth is as compared to what we see in a lot of developed countries or even other developing countries. But where the selling comes is when you have a great chunk of your money coming from US and the situation there, what we saw last week with bond yields going up and general geopolitical uncertainty, then there is a factor that plays out in the market which is called you have periods where risk is on and periods when risk is off. So that was clearly a period when risk was off and people were taking profit scope. And I do think that it's a great thing even for all investors to do, that you do need to book profits at intervals, because sometimes if things go awry and markets start to fall, then you would be making money and then suddenly you would not be making money. So they are compared by those reasons. If they take a view that in the near term things could be bad, they do need to book some amount of profit, because their risk is they are not perceiving risk too favorably, which is why we see FI selling. So yes, I think you have to take this view positive and negative with a pinch of salt, because there could be other factors that could really determine what they do in the short term.
Fair point. Next up, we have a counter of Asian Paints. The question is from Bhanvi Sharma from the YouTube live chat, and she wants. She has not mentioned if it's a short-term or a long-term view. So let's take a short-term view on this first. Kush, how are you viewing Asian Paints and any other stock in the paint bucket that you're looking at?
So interestingly, short term is not the kind of view you should have on a stock like Asian Paints, right? I mean, as Sharmila was mentioning about the likes of Siemens and Bosch, this is also one stock that you should have in your portfolio, the long term one. So all the dips are, incidentally a buying opportunity. Now it's just so that because of the increasing competition in this space, the stock's actually been under a bit of pressure. 3550 is where the stock made an high, and now it's trying to, create bottom formation at about 2900 2950 odd levels. What I would suggest is that view this as a buying opportunity for a long term perspective. It's not a bad idea to start accumulating the stock. Even if I consider it from a near term perspective, the stock's actually gone into a bit of an oversold territory and attempting a rebound. Hence, from a trading perspective also, I would suggest not a bad idea, but with the caveat that this is not a stock that you'd want to have in your portfolio from a trading perspective. On the downside, we're looking at 2875 as the next strong support zone, and on the upside, once the stock crosses the convergence of 3075, this is the point where the 200-day moving average and the 20-day moving average are converging. Once 3075 is taken out, can we safely say that the near-term pain is over and the stock could head to higher levels of 3200 as well? So I would suggest hold on to this one. If you've not got, use it as a buying opportunity.
Okay. Sharmila, do you agree for the longer term, is it a good time to add Asian Paints to your portfolio, or should you wait?
Well, you can add on dips. That would be my advice. But I completely agree that it's a stock that you should go for the long term. And yes, there is new competition, which is some of which has already entered, and I think one player which is still to enter. Having said that, I think if you look at the kind of numbers Asian Paints gave this quarter, then that really doesn't, they were great numbers. So competition doesn't seem to have affected them too badly in any way. So I think it's a matter of time before you see buying interest and confidence returning to names like Asian Paints, and for long-term investors, I think buying on dips would be a great strategy.
All right. Fair point. Next, we have a question from Chandrasekhar, and he's talking about the counter Wipro. He bought the stock at an average price of 377, and he plans to hold the stock. What is the target price for the next 6 to 18 months? Kush, how are you viewing Wipro, considering all the weakness in the IT sector?
Well, if there is weakness in the IT sector, Wipro's perhaps one of the worst hit. It very honestly, I've said it time and again. Wipro doesn't really fall on our radar. As far as the IT pick goes. If you see, that is corroborated by the fact that over the last year and a half, perhaps a little more, the stock's actually gone nowhere. In fact, it's actually gone down by about 10-15% or a little more. So my suggestion is if there is no particular love and affection to the stock, it's not a bad idea to switch, perhaps to the likes of HCL Tech, in the bigger names, or Persistent or Bsoft in some of the, smaller names. And that's the, advice that I would have. But as far as, Wipro goes in particular, since he's already got a position, I would suggest hold on to this one. My stop loss here would be close to 370. I know it's a little close, but that's also a very strong support zone. So 370 is where I would place my stop loss. On the upside, I am looking at 395 as the first level, to be taken out. Now, once that is taken out from, let's say, a 2-quarter perspective, the stock could head to 425 levels also. But then you would find, selling pressure at every rise. So as I said, my first advice would be to make a switch within the IT space. And, if he does have to hold on, then, use the levels that, we just discussed.
Sharmila, how are you viewing it? Wipro, should he continue holding, or is it a switch from your side as well? And if you think he should switch, then to what stock within the sector?
No, I completely concur. I think you need to switch because earnings in Wipro tend to be very lumpy, and so one quarter you have great numbers, and then in another quarter you suddenly see it sort of falling off the dragon sort of the cart, so to speak. And so yes, I think if you don't have any other large cap IT name, then look at an HCL Tech or an Infosys or even a TCS. If you already have another large cap IT name in your portfolio, then I think some of the names, the mid cap names that Kush mentioned, are great names. So you could look at those. But yes, I think the basic advice is that switch out of it.
Okay, next up we're talking about Dr. Lal Path Labs that came out with its numbers yesterday, and the stock is up about 5-6% today, about 6% right now. Sharmila, how are you viewing Dr. Lal Path Labs? Pretty strong results yesterday.
Yeah. So what we actually saw happening with this entire sort of testing and pathology lab space was that during COVID they had a great run, and then post-COVID you saw a lot of competition enter, and which was like sort of eating into their profits and margins. And you saw the sector really, whether it was, I mean, you take the name, whether it's Thyrochem, Metropolis, Dr. Lal Path Lab, all of them trading, they corrected and then they sort of continue to trade in a range. But now the indications are that that sort of price war situation has ended, and you even had the low cost players sort of increasing prices. Plus, I think these companies have sort of re-looked at how they are doing things and brought their costs down, and it's now beginning to reflect in their numbers. I think Metropolis also, if I remember correctly, reported a fairly decent set of numbers, and now we followed it up with Dr. Lal Path Lab. So, I don't think that as a business testing is bad because we are all testing more. So it was just really this competition that had come in which disturbed their sort of profitability and balance sheets. But I think now they're back on track. So I'm positive on Dr. Lal Path.
All right, fair point. Last question now, and we're getting this question almost every day. So, and Diwali is around the corner. So, what are your Diwali picks? Kush, let's start with you. What particular stocks do you suggest buying at this point?
a couple of names on our radars today in our advisory. We've released a call on Vedant Fashions, which was Manyavar. The stock has been seeing volume pick up a while since a while now. Interestingly, the breakout has not come around, which is actually a very healthy sign if you ask me, because the volume and the delivery sort of is going up, but the stock's actually just holding its ground, which means it's getting due for a big move from here on. At least in the near term, we're looking at a 1335, 1370 kind of levels on the upside, 1275 on the downside. One other stock that we have on our radar is Sirma SGS. The stock had actually run up quite sharply, and it's seen a profit booking just as sharp. But now it seemed to be forming a base, and the upside from here could perhaps be the recent swing highs also, which is actually close to 650. Where the stock touched. So I think this dip is perhaps a profit, rather a good entry opportunity. So these are a couple of names that we have on our radar. On the big boys, we've got Axis Bank and Cipla. Both of them have been actually doing rather well, in their in the respective spaces. So Axis Bank and Cipla are a couple of big names that we've got on our list.
Okay, Sharmila, what are your value picks? What are you looking at?
So I think one stock that investors could look at could be MapMy India. They had a very decent set of numbers, and I think even if you hear the management speak, the kind of growth that they're talking of for the next couple of years, and all of us are seeing, the kind of usage. I mean, cars come fitted with a GPS device and mapping device when you buy them. So all their verticals are going well. So according to me, that this company has a long way to go. So you could look at MapMy India. Another stock which I think which is at very decent valuation. In fact, the entire pack. There are many names within in the banking space where results have been good and which you could look at. But I'm going with two names. One a private bank, IDFC First Bank, and the other would be PNB. PNB seems to coming out of its past sort of growth, and you have seen improved numbers from them. You have seen NPAs getting sort of controlled. So I think that could be another interesting name to look at.
All right. That's all the time we have for today. Thank you, Sharmila. Thank you, Kush, for taking the time out and for answering so many questions for us. Viewers, we'll be back tomorrow, same time, 11:30 a.m. Until then, stay tuned to BQ Prime.